Chad, good to see you, sir. Your overall reaction, what surprised you from the earnings report?
Sure. Thanks for having me. So the loss was a little bit worse than expected. Cinemark, one of their big competitors, had reported earlier in this earnings season, and they generated about $140 million of positive EBITDA. AMC lost a little under $15 million, despite them generating more revenues than Cinemark. That was one of the takeaways. The second takeaway was, as we look at ticket pricing, concession per head, some of the key metrics that kind of filter into the model, it looks like that started to come down. Now, that was inflated during the last 2 years because fewer people were going. They were willing to spend a little bit more at the concession stand, at the ticket cage. So that's starting to come down. And then I'd say the last thing is on the APEs. So it looks like during the quarter, AMC was able to successfully sell 15 million APEs. So they raised 36 million of equity. They've talked about this as kind of a source to help them pay down some of that deferred rent and obviously improve the debt situation. So that's probably the key focus on the APEs. Their goal was to raise more money and improve the fundamentals of AMC.
So Chad, then I guess are you more positive on this name than you were just around a month or two ago? Because I think it's hard for a lot of people to get on board when there's still so much uncertainty macroeconomically and then also specifically within their business.
Yeah, I would say, we expect for them to have an earnings call with a lot of hope. The last 3 months, there's just really been kind of a dearth of product. Top Gun was just a great kind of taking off event. And then since then, we really haven't had much to kind of sink our teeth into, and the companies haven't made much money since then. Obviously, there's a big release with Black Panther, Wakanda coming out. And then the big one around Christmas is the next Avatar. So we're still not really kind of seeing that consistency outside of these huge releases. So we expect for them to talk about that. But at this point, we're not any more positive. It's really that negative operating leverage without a consistent release schedule in movies that people want to go to on a consistent week in and week out basis. It's hard for AMC to make money to justify anything other than our current rating.
So Chad, then given that inconsistency, then where does the growth story for AMC go from here?
Well, I think one of the things that came away from the Cinemark call is they talked about the number of films that would be marketed from the studios in 23 being back to pre-pandemic levels. So that's something that's really important. And then at that point, we can kind of think about if the consumer wants to see these big, high production, high marketed movies at this point. There's been a few positives, but again, no consistency. October started out pretty weak for everyone in the quarter. So, it's a tough start to the fourth quarter. I'd expect for fourth quarter numbers to probably have to come down unless we see, some positive results in the next couple weeks. And then from there, it's all about some of these big releases, again, around Christmas and into 23. AMC obviously is the most creative company out of the exhibitors. They announced the Zoom announcement. They have other opportunities. They announced the APE preferred equity issuance last quarter. So we always expect for kind of the unexpected from Adam Aron and AMC. So that's always something to look forward to on the call.
I certainly got to expect the unexpected from him. All right, Chad, Beynon, thanks so much for joining us. Really appreciate it.
Thank you.